Hey, welcome to the Closing Beat, everybody. Happy Wednesday. Call it Wipeout Wednesday or something. Hey, welcome to the Closing Beat. We're financial advisors here at Jazz Wealth. We do things a little bit differently. We like to teach. We like to show you how things work, help you out with everything that touches your dough. And one of the ways we do that is every day here with our show called The Closing Beat. It's available for everybody. What's not available for everybody is Thursday nights. We do a class just for customers, kind of like a get-together, hang out, real relaxed sort of thing. And this week we'll be talking about Nest Egg, our financial planning software. If you want to look into it, it's actually called Right Capital. We just call it Nest Egg because they let us give it its own name. And so we're going to cover that this week for our customers. Also, I had a thought, right? I was like, we need a commercial. And I think I'm going to share it with you at the end of the show here today, but I think I come up with a commercial that's literally going to get us more customers than we can handle. So just stay tuned. You let me know what you think. If you're watching the replay and you don't care about the show, go to the end, check it out. I don't know. I think I'm onto something. We'll see. We'll see. You guys let me know what you think. Hey, let's talk about the stock market here today. Well, it was a nasty day. You can see off to the right-hand side of your screen, you got down markets pretty strong across the board there. Hey, we had Congress get together, and they actually, there was a bipartisan agreement to pass a spending bill. Well, go figure. When it comes to spending money like that, they figured it out. Don't you think maybe it would have been a little bit better if they would have just shut down? Like if the government could have just shut down a little bit, maybe, the main part anyways. Anyways, that helped us out at least to start the day, but the markets just sold off throughout the day. It was just a consistent selling. We started positive and just slowly faded away throughout the day. If we take a look at the S&P 500, here you go on the screen, completely erasing all of yesterday's, now down over 7% just this month, by the way. I'll share some data with you on that in a second. You can imagine it's going to be some of your bigger names out there that were the biggest drags on the S&P. You got Apple down on the day, Amazon reversing almost all of yesterday. You got Microsoft on the day too, one of the bigger drags there. Almost everyone was to blame in the S&P 500 here today, but there were some bright spots. You got Nike hitting new highs. Actually, this for Nike is the best earnings, best move on earnings, or the day after earnings, in the last 20 years. So looking pretty good there. I mean, that wasn't too bad. You also had Twitter hit new highs as well. Very strong move overall there. And some of the retailers I'll point out. You got Under Armour. It's not a very strong stock, but up 5% on the day today. Hasbro was another one. At 2% gain. It's kind of sleepy in this area, but that one stood out as trying to do a little something. And Hanesbrand's been a pretty strong stock, almost back to new 52-week highs as well. Here's the problem. You got people a little bit concerned about a crash. There's a study that Yale does. You can actually just look at the Yale School of Finance. This isn't my data or anything. But what they do is they measure the sort of sentiment of investors and institutional investors, the bigger companies or the fund managers and things like that. And what they do is they just kind of measure like what's your fear of the markets crashing? So the lower the number, the more fearful people are about there being a crash. It's a little bit different, but they do it this way. So if you look over here, the blue line is individuals. That's the lowest level in over 20 years, meaning people are more scared of a crash, individuals are, than ever. Kind of interesting there. And not looking too good for the institutional investors either. They're sort of thinking the same thing, that they're looking for a pullback as well. A crash, I should say. So kind of interesting to see that. However, one extra thing I could point out here, if we look at, what is this thing here? Let's just get rid of that. I don't need to see that. One other thing is they do a buy on the dip sentiment sort of survey, which is also just a way of them saying, hey, if the markets did fall, would you be more excited to buy on the dip or less excited to buy on the dip? And basically, you've got everybody happy. Institutional investors say if the markets do fall or crash, they're excited to buy on that dip. Individual investors, slight downtick month over month there, but individual investors, they're excited to buy on the dip, not as excited as they've been, but not too bad. So we've got this sort of disconnect in the market where people are saying, I'm a little bit fearful that there's going to be a significant decline. However, if that does happen, I'm willing to buy that market. So that's kind of what they found out in that study there. You can also look at it, Yale School of Finance, if you want to take a look at some of that stuff there. Now, as far as the markets go, Septembers are weak. You're watching the show. I've gone over all the data before it actually happened there. But that Septembers tend to be weak. Let's go on and take a look at something here. Septembers, I've shared this chart with you in the past. They rank as, over the last 50 years, the only month that averages a downturn. So the fact that we're down over 7% it's a little bit more than the average here. You can kind of see, but it's a down month. It's expected to be a down month. So it's really nothing odd other than the amount of the decline that we've seen there. What I did is I looked back over 70 years to just expand on this a little bit. Average decline is still negative. The median decline is still negative. The best was in 2010. Over here is where I'm at. And you can't see the, oh yeah, you can see the cursor. Best 8.75% in 2010. The worst September on record is 1974 with about a 12% loss. What we did is we ranked them here for you to take a look and see where is this September relative to all the other Septembers. So September as of now for 2020, and then the full month for all the previous years there. So you can see 1990, this is the top 10 worst Septembers out of all of them. In 1990 minus 5%, you got a whole series in here. We're currently ranked as the 6th worst on record there, trying to make a run for the 5th worst on record. So you ask yourself, I mean, is this bad? It's pretty bad pullback, but is it the worst it's ever been? No, there's been some other ones there, but we're getting close. So kind of interesting there if you're taking a look at the S&P 500. We'll move on here and talk about the Dow. Let's go over to the Dow. A little bit of a pullback there, down 5.5% on the month, but it did hold up better than all the other indices today, just barely. But that was because of names like Nike. We already talked about that one. And some of the healthcare stocks. Nope. You got J&J, although it was just slightly positive on the day. That one helped out there. And then the other one was Merck, I believe. Yeah, Merck finished negative, not as bad as the others. A little bit of relative strength there. This pullback is kind of nice. Those were some of the ones that held up okay inside the Dow. But other than that, it was pretty nasty across the board there. We go over to the NASDAQ. That was your worst performing major index of the day, erasing all of yesterday's gains there. It is now down 10% for September. It was, like I said, the worst performer in terms of the major indices. Apple, Microsoft, and others were some of the big drags on the sector, or the stock index overall. Some bright spots though. Let's look for some good stuff in here. You got Costco, the retailers again. Costco, Lululemon up 1% on the day, and Dollar Tree in the NASDAQ was flat. Basically, I mean, it didn't finish the day positive, but that one tried to bounce a little bit, but the markets kind of pulled it down for the day. You also had some virus stocks. If you happen to be looking out there, you're going to look at something like DocuSign. Thought it held up pretty well today considering what the markets did. And Zoom, way extended here, just way extended. Keep that in mind. Obviously, it had a good day. It was looking good, new 52-week highs. It is very extended. And one last one, just to give you some stocks to look at, eBay. Kind of flat, down about 0.5% on the day, but that one's been bouncing over the last couple days, whereas the market's had a tough time over the last couple days. So that one stands out a little bit there, if you ask me. Hey, our FinTips videos, bottom right-hand corner of your page, you can take a look at them, how a 40-year-old will retire early. He wants to retire at 50, so we planned for that, to kind of show that. Today we posted 4 reasons you might not want to use a Roth IRA, just some tricks and little fine print in there you might want to look at. And then Friday we've got a little fun math trick that maybe you didn't know. Be a fun video, real short. But if you want to play a little game with your friends and see how they might handle their dough with an example, I'll give you an example. And maybe the answer is what you think. Maybe the answer is not what you think, but take a look at that. And then on our research site, got a couple cool posts up there here in just the last couple days. I'd like to point that out. We've got housing stocks, right? Housing stocks, or housing market is on fire. Take a look over there. We went through and talked about what's going on in the housing market specifically, and then gave you a list of stocks so you compare whether you like to go for the best performers or you like the ones that are pulling back. We put that in there as well. We did a strength versus relative strength, covered that yesterday, and Cody's got a post that should be live about now on the betting stocks out there if you want to take a look. Hope you enjoy. If you're not a member of the research site, it's $13. If you can't join us here at Jazz, you can sign up for the membership site. Otherwise, it's free for all of our customers as well. Let's go over to the sector breakdown and take a look and see what we got here. You're done with that. We're going to look at tech stocks. Tech mostly lower today across the board. You just Apple, Microsoft, things like that. Your semiconductors sort of supported. So LRCX, we talked about this bouncing off the 200-day. That's looked pretty successful there. Micron Technologies up just a touch. We're sticking with the semiconductors here inside the tech sector. You got KLA 10 Core. It did give up most of its gains there, so I won't count that one. AMAT also gave up most of its gains, but still holding up relatively well. If you look at something like the semiconductors, as a whole, they pulled back, but if you're a stock picker, you've now got a few symbols to go take a look at. You got consumer staples there, down 1.5% there, nearly negative year to date again. You know, it's working its way back down there. If you like pullbacks, Here's a few stocks, right? You got General Mills. We're going to kind of talk about some of these pullbacks in here because that's what's happening right now. General Mills pulling back. Over the last couple days, it's pulled back, and today pulled back just a little bit. You got Altria in the space, very extended in the short term. Tough to buy these, but if you like them. Clorox pulled back as well. You got Smuckers in there if you want to take a look. Very strong pullback, over 10% off the highs there. You got Kellogg's, very extended here in the short term, and today went a long way to giving you more of a discount if you like that stock. And then I'll point out Hormel, right at the 200-day moving average, 2% lower on the day. Now that's the pullback stocks inside this consumer staples. If you like the relative strength stocks, those that are holding up, you're going to be looking at Procter & Gamble, holding up pretty good there. Constellation Brands, not bad. It was down 1% on the day, but holding up nicely. And Costco, good relative strength overall there, not only today, but over the last few days as well. Going over to healthcare. There you go. Healthcare was the strongest sector out of the group, although it still lost 1%. Every single sector lost 1% today, but that one ranks as one of the better ones, as the best one for the day. You've got Algen in the healthcare space there, down 4% on the day, ranks as one of the relative strength stocks overall. Today wasn't good, but you get what I'm saying. Danaher hinting at a new breakout there. Also PKI, if you like this one here. It's a very similar pattern overall if you happen to be in the healthcare space. You got AbbVie pulling back here if you like your pullback stocks. Just wanted to give you a good mix of stocks to look at today. United Healthcare, a pullback stock, and Edward Life Sciences, real sharp pullback right into some support there. This is about your range maybe where you find a little bit of buying in there. So something to look at if you're looking at the healthcare stocks. In the energy space, all out meltdown, right? Just horrible. Weakest sector all around. Today it was the weakest. It's the weakest over the year so far, year to date. It's just a horrible one here. What you might want to look at is breakdowns and downtrends, right? So for example, ONEOK. Here's a hint at one that's breaking down. Volume's okay, but it's breaking down just a little bit there. That's the kind of thing you might want to look at. And Franklin Universal also breaking down just a little bit. This is more focused on the space in general, not really an individual stock. We'll take a look at XOM, ExxonMobil. You know the stock, down 3% on the day. And by the way, this was the best performer in the sector. So down 3%, and still it was the best performer in the S&P energy sector today. Not good. If you're looking at energy there, it is now over 45% lower year to date. Not really what you like if you're investing in the energy sector. Yield on ExxonMobil, by the way, nearly hitting 10%, right? So give you an idea where that's at. All right, new highs, new lows for the day. There were 3 new highs, 1 new low, as you can see on the screen there. Twitter was one of them and finished positive on the day. Overall, Nike was one of the other ones and finished positive on the day. The one that didn't finish positive was Dollar General. Hit new 52-week highs, great relative strength, nothing wrong with this stock. It just gave up everything today. You got a bit of a Christmas tree pattern going on there, down 2% on the day. A couple others that are really close. Coty, C-O-T-Y, almost there, breaking a new 52-week lows. Molson Coors, you know that one, almost breaking a new 52-week lows. You got Wells Fargo, Gilead Sciences, right? We've talked about a few of these just to keep you in the loop. Obviously not looking good. Wells Fargo, almost there, about to hit new 52-week lows. And did I say Walgreens? Walgreens also in the mix. Those are some of the more the weaker stocks in the S&P that are right there. In another couple days, they could be making new 52-week lows, so careful there. All right, let's go over to the watch list here and take a look, see what we got today. What we're looking for is not only pullbacks, but extended pullbacks. So just to find stocks that are pulling back, very simple. You could probably do that. You could go around and take a look, and I already gave you a bunch of them. But what we want to see is stocks that are pulling back, and they're also extended relative to themselves. See, to be a counter-trend investor, counter-trend trader, is rather difficult because you're picking, it's sort of like catching a falling knife theory is what people say. So if you're going to catch a falling knife, you want the one that's falling the fastest, right? It'll cut you quick, and you'll either figure out if you're right or wrong. It's probably a pretty bad way to look at it. So what we're doing, we got a simple scan here for you today. We're looking at stocks that are extended, but also extended compared to themselves. So in other words, something's odd. They're rolling off the cliff a little bit faster than they normally would. So we'll go through a few of them here. We'll take a look and see what you might think. These all are watch list stocks. These are not buy them now stocks, so keep this in mind. You got Citigroup. It is extended, and it's extended relative to itself, meaning it's further away from price, or its average price, you could use moving averages if you like, than it normally likes to get. An example would be on the upside. When it gets a little too extended, what happens? It pulls back. Stocks do not like to be far from their moving averages. Now, when you have a market that's selling off And stocks that are rolling away a little bit faster, it's a little, I'm not saying this is a great strategy, it's a tough one, but you have this sort of thing where they're getting extended, maybe due for an oversold bounce in the short term. Illumina, same thing. We've talked about this a few times. Very extended. It does not like to be this extended. Here's your virus decline here. What happened? It snapped back. Anytime it gets too far ahead of it itself, it starts to pull back. Well, right now, market's weak, sector weak, and you've got a stock that's weak as well. So one to consider there if you're taking a look. Kraft Heinz, rather rapid sell-off here. Let's take a look real quick. We take a look at this one. Off the highs, you got Kraft Heinz down 20%. That's the magic number that it hit today. So you got a 20% pullback, but it's how fast you had that pullback. These stocks don't like that. I'll give you an example from the other day. eBay rolled away a little too quickly. What happens? People say it's a discount. It's overdone in the short term. People, algorithms, big companies, whatever, they come in and they start buying that stock in there. So something to look at, which has already bounced. You got Teleflex in the S&P 500, also very extended. You're looking for that counter trend pullback or counter trend bounce inside of there. A lot of regional banks, by the way. State Street rolling over here. Obviously, the banks have been weak. You've got stocks that are rolling over a little bit faster. Citigroup was a bigger stock we just mentioned there. Henry Sheen, also, look at that, quick little pullback, breaking an uptrend here. If you were to draw a line, real simple line, you got technical traders going, oh no, it broke the uptrend. What happened when it broke the uptrend? Stop losses, people bailing out. Take a look. You have this trend. As soon as you break, volume increases, people get excited, they're nervous, they want to get out. Well, once that all bleeds off, it rolls away quickly, and you look for that counter trend bounce. This isn't going to be for everybody today, but it's another way to look at the markets. And then just to have something different here, you got Newmont Mining. This one looks like it's got a little more in it still, but Newmont Mining rolling away today. Had gold down 2%. That's 41 bucks. So pulling away there. That might be one to take a look at. So a real simple watch list for you to look at today, and a reason why you would do it. Every stock is pulling back. So what makes one better than another? The fact that it's pulling back faster. Right? It's a tough trade. Right? So there you go. All right, stocks in the news. Let's take a look, and then I'll answer your questions if you happen to have any. You got a lot going on here today. Amazon came out today and said, you know that bike that we talked about yesterday, the Prime bike? That's not our bike. We have nothing to do with it. And they told the company that makes the bike, Echelon, they said, stop it. Right? Well, don't quit making it seem like you're working with us or somehow we built the bike. We didn't. So they completely disconnected themselves from that. And there you go. That sort of thing happens. All right, you got Nike in the news. That's going to be earnings beat by 45 cents, raised their guidance, which was the key for this earnings season. Revenue's better than expected. The key there is their online sales. Huge spike in their online sales. That's what they wanted. That's what they got. United Airlines down a little bit on the day. They have come to the Treasury and said, we need money. Help us out. I don't know why it's come to the point where you can just do that, like go to the Treasury and ask for money. I can't do that. So not sure how they come up with that. Nonetheless, you got United Airlines down a little bit today because they need money, and they're making it public. It's just kind of a weird thing, if you ask me. Lululemon up 1%. We already talked about this today. It's going to start its buybacks, right? They've got about $263 million left to go that they wanted to buy in shares. They decided they're going to do that. Volume was higher today, likely them. Citigroup's closing down their market-making division in retail space, and maybe that hurt them today. I don't know that was the reason. Everything was kind of weak, so it's kind of a tough one there. And Pinterest says their new rollout of the iPhone app broke records in terms of number of downloads there. Seems like that was probably news that people knew yesterday. Today it spiked to new highs, but with the market being weak, you get what you get. All right, earnings coming up here. Let's take a look. And then I want to share this commercial with you, right? I'm telling you, this is like marketing genius here. I'm sort of being sarcastic. I'm really being sarcastic, but hang in there. You got BlackBerry, CarMax, Darden Restaurants, Jabil, and Costco reporting earnings. Interesting. That'll be tomorrow, some before the market, Costco after the market. You got Equity Residential, 60-cent dividend, Medtronics, 58 cents, and RBC Capital, 30 cents being paid out. And I'll take your questions if you happen to have any, see what we can do there. And then we'll wrap it up there. You guys like your airline stocks? Yeah, I see. It's a tough space, You like Tesla on this dip. Tesla pulling back, I think it was 10% today. Yeah, right on the dot there. Tesla pulling back 380, magic number that it closed at today. You got the 50-day where it bounced earlier, right around 360 or so. So something to look at there. Borrow money when you can, not when you have to. Oh yeah, somebody's paying attention. I like it. Dr. Horton. He's there. Square, what do you mean is it a good one? Is Square a good one? You can argue relative strength there. Obviously, it's done well. It's held up nicely. These sort of fintechy companies have held up well, also kind of seen as a stay-at-home a virus-related stock. But I don't know what you mean. If you're looking to get in for a trade, it's kind of a choppy area. Like what makes you think tomorrow is going to be up or something? So I need a little bit more there. Give you some help. You prefer that it pulls back, I would think. Yeah. I love it. I love it. Oh, you guys like your Square there. I see. You like Boeing. You like Boeing to hold right here in this 150 area. I know a lot of people that prefer to see it closer to $100 again. That's one of those, if it gets back down there, I think people would be excited for that. It's a long way to go. I'm not saying it goes there, but yeah, I know people are very, very much salivating at this one possibly rolling over. Yep. What do you think of Goldman Sachs now? Oversold? So not the most oversold out of the sector there, but this is another one that has rolled away a little bit quick. Down towards 180 or so. This is the kind of stock you go, wow, that's just so extended. Maybe a short-term bounce for like a scalp or a short-term trade. I can't blame you for doing that one. You like well, the time to sell out of the gold and silver miners or gold in general is when it breaks down. So right now I would let it bounce back a little bit. I wouldn't just like run away right now. But yeah, you got to watch these breakdowns, right? Same with when it broke out. That's your chance to buy it and then you hold tight and see what happens. But I don't know that I would just run away now. No. At what point do we consider this an extended downtrend or a bear market if we keep getting... Well, it's not a bear market yet. Just in the correction territory there. But I think you're talking about the stock market in general. You got just over a 10% pullback there. 20% puts you right around here, I believe, almost 3,000. So that would be the bear market. Well, let's see. Where would we be? You'd have to be... No, you'd have to be even further. Oh, we did this on the S&P the other day. You got to be around like 2875. So you got a ways to go before we get to that point there. But I think a lot of people look at the 200-day moving average and say that's not going to feel good, but if we get down there, I'd be pretty excited about that. We'll see. I saw the White House lawsuit there. Tesla kind of spearheading that on the tariffs on China. Yeah, I could understand their frustration there, but I don't know how that's going to work. You don't just get to do that successfully, but we'll see. That's likely going to be an issue going forward there. And I didn't know a lot of the other companies joined on board there. I thought it was just Tesla. Disney reopens Hong Kong, I believe. California is still in the, up in the air. Florida's open. They're having a great time down here. Busy as can be, by the way. Down 3% today. This is a tough one. Yeah, for Disney, in my opinion, anything under 120, you start to look for the bounce, but don't guess at the bounce. That's a tough one to just dive in on that one. Very sensitive. Southwest and Delta are the only two that have not asked for additional funding. Is it bullish in the short term? Yeah, it could be. Southwest has plenty of money. Alaska Airlines also has plenty of money. So, I mean, it could be. If you're looking to invest in that area of the market, then your first thing is to say who's the most liquid, right? Because you don't know what's going to happen travel-wise or if the virus comes back up or something. So something to consider. And I like that you have a regional versus a national as well. So you don't have it all in like American, I don't know why you would, but American and Delta and all this global exposure. You got Southwest doing their thing here, JetBlue, people like that. I like that idea. Yep, I love it. Hey, tell me what you think of this commercial. I'm gonna wrap it up for the day. I do appreciate you guys hanging out, but I think we're gonna air this commercial nationally, I think. So let me know what you think. I'll wrap it up from here. We'll be back tomorrow to do this all over again, and hope you enjoy the rest of your day. Thank you so much for watching.